Vinay Kulkarni, Senior Manager Equities with HDFC Mutual Fund joins us live. Vinay, good morning. Thank you for joining us. Vinay, the problem is out in the open. Rupee has fallen, GDP numbers will get marked down, earnings will come under stress. So do you think the correct strategy after the recent price damage is not to focus on the bad news, but it is now to really focus on where to identify good stocks after the crisis?
Yeah, good morning, Nikunj. Thanks for having me on your channel. Yes, certainly I would think so. I think we had a terrible time in the markets. I think currency has got whacked like never before. If you look at a 2-year time frame, the currency has actually depreciated by 50% over the last 2 years. The markets have also, been behaving very badly in terms of the banking sector, for instance, has really got hammered. There's a whole host of negative news in terms of India, economy, the stocks and so on. I would say that in the recent memory, the sentiment has never been as bad. That apart, I think valuations are now looking fairly attractive. Even if you assume much lower growth rates for earnings in general, even with a 8 to 10% earnings growth for FY15, the index is possibly trading at close to 12 times 1 year forward earnings. If you look at several sectors which have been badly beaten down, banks for instance, there's a lot of noise about how NPAs could go up further and so on. But I think if you look at the news which has been coming out of on the government policy front, I think definitely some things are changing out there. We see a lot of activity in terms of the Cabinet Committee on Investments, for instance, taking a lot of decisions on coal availability to power plants. The SEB restructuring package is going on nicely. I think we will see a lot more action on the policy front, I think, going forward. I think if that happens, some of the projects which have got stuck due to either slower policy making or environmental issues and so on should get cleared going forward. I think we will see this resulting into a lot more investment happening in the most critical sectors like infrastructure. And as and when this starts happening, this should certainly take the pressure of the banking sector, because in terms of the potential NPAs, they will come down. And as we start generating more power, as the mining sector starts improving operating performance, I think a lot of the bearishness which is there today in the markets will just vanish. So given very attractive valuations, given good policy reform steps which we are seeing from the government, I think the current phase of sharp rupee depreciation as well as sharp fall in the stock market, rise in the bond yields, should all be a distant memory maybe in a year's time.
Vinay, so what's the big call then on the market? Is it ripe time to start buying into beaten down names, metals, infrastructure, or for that matter banks? Or do you think there is significant downside still left to go?
I think I would favor the most beaten down sectors such as banks, infrastructure and metal names. For obvious reasons, as we all know, the long-term story, the long-term India growth story remains intact. And what is the story all about? It's simply about investing more in infrastructure sector. And we are talking of investments which are absolutely needed right now for the economy, for the country to go ahead. And given the way policy reform has been happening in the last few months, I have no doubt that the policymakers are keenly aware of the need to invest, of the need to facilitate inflow of funds into these various sectors. So I think the policy steps will be taken to ease the investment. Investments will happen in these sectors. And clearly, if you look at stock performance, some of the infrastructure names, for instance, are down to price levels last seen in 2005. So clearly there has been a big bloodbath in that sector. So cap goods, infrastructure companies look very interesting from here. Banking, I think, again has been beaten down both in terms of the pressure on the balance sheet due to slower economic growth, problems due to bad loans stuck up in power projects which have not taken off and so on. I think banking sector should also look up from these levels. If you look at the valuations, some of the private sector banks are quoting at maybe their 2 or 3 year low as far as the price to book value is concerned. The public sector banking space has been badly beaten up. I think most of the banks out there.
Right. Okay. You have a large exposure to IT. Is that a call on currency, or you think that for IT the business environment has turned around?
I think it's a mix of both. Effectively, IT sectors went through a very tough, last 2 or 3 years, and the reason for that was that demand growth actually slowed down. The major markets are, the North American markets and European markets, both of which experienced slower growth in the last couple of years. That, I believe, is changing. I think volume growth is coming back to these companies. The rupee depreciation actually is icing on the cake, and the way rupee has depreciated of late is going to be a game changer for the IT companies. Simply put, it gives them a lot more leverage, a lot more freedom to go out and win the large deals on the basis of somewhat compromised pricing, and then maybe possibly hedge on a forward basis and keep your operating margins intact. So I think the rupee depreciation is icing on the cake, but the real story is the return of volume growth in these companies.
You have a large exposure to PSU banks. Are you worried about the book quality there? Yes, on optical basis, based on current price to book, they are attractive. They fall in below book. But in such an economic environment, one wonders what is the real value of the book.
I think, Nikunj, what happens typically in a market scenario where you have a fall of 30, 40, 50% in terms of price, and economy deteriorates a bit, there's simply absolutely zero visibility as far as the next 12 months or 24 months are concerned. I think we have seen this happening with Indian banks, both on the public sector and private sector side. Public sector banks have been beaten down on worries of rising NPAs. But I'm sure as the growth rate picks back and the policy measures in terms of power sector and infrastructure sector take off, I think we will see lesser pressure in terms of NPAs, and that is when these stocks will bounce back.
Vinay, good chatting with you. Really appreciate you taking the time out and speaking with us today.